Morning, everyone. It is Thursday, May the 3rd, 2018. It's the Gold Goats and Guns half hour to 40 minutes here on YouTube. My name's Tom Luongo. I hope you've all had a good couple of days. We got a lot to talk about, as always. Everybody know whether or not this is good shape or not. I'm going to try and do some stuff this morning. I'm going to go to the desktop a couple of times. I'll go off some charts. I want to talk about Bitcoin today. We're going to talk about the cryptocurrency markets. We're going to actually do markets as opposed to geopolitics today for the first time in a while because, well, it's time to shift focus a little bit. Geopolitics has been incredibly important for the last 3 or 4 months while the crypto markets have been mired in a ugly, vicious bear market. With the end of tax season here in the U.S., it's obvious that that pressure has been lifted off of those markets. As people can now return to the market without enforced selling due to dealing with tax issues from trades made in 2017. So good, thank you. So this is that time, and I got asked over the weekend by Diane Freeman over at investing.com to participate in their biweekly roundtable about the crypto markets and what's on. And the article got published this morning. It's in the show notes below, and I urge you to check it out. It's also to be honest with you, I wrote it on Sunday morning and handed it out immediately to my patrons over at Patreon as part of the private blog because, well, they're paying me for that, and investing.com doesn't pay for that content. So I own the copyright on it and not them. Fair enough, right? Well, that's just the way it works. So that's part of what we do over here is we do about exclusive commentary and answer questions directly for people who are looking for some advice, either in the general financial markets, which today, or the crypto. So the short answer as to whether or not we've reached a new bull market in Bitcoin and the cryptocurrencies yet or not is complicated. I would say no, was my ultimate conclusion Sunday morning, looking at the charts, and my conclusion this morning. I mean, the markets look better. They look great. It's funny to say that a market that is up literally nearly 50% over its bear market bottom would somehow not be in a bull market yet. But that gives you an idea of just how massive last year's bull market was. Cryptos. Bitcoin is still down 50% from its all-time high, yet it's up 50% off of its near-term low. So, when looking at the charts dispassionately and from a technical perspective, Bitcoin is doing fine, having pushed now through the 23.6% Fibonacci retracement line, but it hasn't reached the 38.2% line. And frankly, while I'm not a huge fan of Fibonacci, the crypto markets tend to trade it in very much in sympathy with them. And I use them as kind of a general guideline thing. And as far as I'm concerned, when you're looking at the bust of a bull market, the 38% Fibonacci line is your dead cat bounce line, right? That's just where markets tend to overcorrect. They tend to overshoot on the upside and overcorrect on the downside. And so you have to be very careful in looking at relief rallies like we're seeing now in the cryptos, because the 38% line is sitting up around $11,200 in Bitcoin. Other coins like Litecoin haven't even reached the 23% line yet. 23 points. There's a lot going on. Whereas on the other side of it, like Ethereum is breaking through the 38%. So it's completely, it's now proving that it's not really a dead cat bounce, which is great, right? You just have to be dispassionate how you go about your tech, how you go about your analysis. And it's hard. I mean, I'm a terribly emotional person. That's why I'm not a particularly great trader. A good chart analyst, I'm not a particularly good trader. There's a difference between being able to analyze the markets and being able to actually trade them in real time, which is why I don't do a lot of active trading. It's why I don't recommend anybody doing a lot of active trading unless you've got the temperament for it and the training and the time and the capital to blow, because you're going to go broke 3 or 4 times learning how to do it. And that's part of the reason why the Gold Goats and Guns investment portfolio is not really designed around a lot of movement in and out of stocks. It's really about trying to pick stocks that are fundamentally secure, sound across the markets that I understand best, which is the precious metal commodities and cryptocurrencies, and build a portfolio strategy that will, in many ways, crisis-proof over the long term. It's not going to be without its volatility, because all three of those spaces are incredibly volatile. So you're going to see an upswings and you're going to see 40% downswings. But as long as, and that's simply because the markets, the underlying markets themselves, tend to be fairly volatile. But that doesn't mean that you're in any real overall danger if the portfolio strategy is balanced to mitigate that volatility. And the main way you get around that is by buying very strong dividend stream, which then insulates you over time by allowing you to continually accumulate through reinvestment of dividends into a larger position over time and average in lower and lower price over time. So there's a number of ways of going about this. And this is the way I found that for playing these particular markets, this is really the best way to. No, they each individually, oil, gold, cryptos are easily and individually a way of going really fast. All right, so enough of that. So looking at the situation in the cryptos right now, Bitcoin is pushing through $9,200 is nice. Like what I'm seeing today. Still want to see it, put in a weekly close above 11.2. Right. I only consider Bitcoin at this point the bellwether for the rest of the market, simply because it's still the biggest in terms of its overall market cap. We've had a tremendous rotation of capital out of Bitcoin itself in the crypto space and into other coins. At this point, it only represents 35% of the market. And this is very healthy, right? This time last year, Bitcoin was still 95% of the market. Maybe not this time last year, but certainly in Q1 of last year. Market. And today it's only 35%. Interestingly enough, there's a call. I don't have a link to the liner notes about it, but there's an article up in Zero Hedge that just went up that one of the former co-founders of Reddit is calling for $50,000 Ethereum this year. I own Ethereum. It would be nice. I'm not sure I agree with him, but a 20 bagger from here in Ethereum would be impressive. It also indicate that there was a similar move in other smart contract platforms, Waves and Moto, and up my head that that's really obvious that I can't think of at this point. I'm sorry, but those types of smart contract platforms would also tend to be very, very EOS put in another 20 bagger from here. Astounding, since it's been literally put in nearly a 20 bagger so far this year. It hit a low of what? No, it's about a 6 bagger. It hit a low of in the $4 range. So pretty impressive. And a lot of these platform coins are the ones where I recommended privately. And in the crypto space, you have to really be thinking about what's going to build the new economic infrastructure. It was like internet stocks in the 90s. Why would you be buying pets.com when you could have been buying Oracle? Right? Oracle was the company, or many of them, Oracle and others, were going to be the ones that were building the infrastructure and building the software platforms that the thing was going to run on, as opposed to the end user consumer space stocks. And I like in a lot of the utility tokens, things like Golem and others. And they're projects that I have sympathy for. Kind of cool, but I'm not sure that they're ultimately necessary when you still have to build a foundation the whole economy is going to run on. So that's again, I'm a commodities and kind of a foundation guy. I believe in foundation. So to me, of course, it makes sense. Sympathetic or partial to the issuance of stocks, so they are what they are. So I find what's happening in the crypto market to be interesting at this point, but I'm not sure that you want to go all in. Got cash on the sidelines. You can toe dip here, certainly. Didn't buy the bottom Bitcoin. pretty obvious. You got two opportunities. But there are plenty of coins that still have not moved there yet. I mentioned Litecoin earlier, and I'm still waiting for when that goes forward. I think some of the froth that happened in Litecoin happened to be around rumors that Facebook was adopted for shot the price way higher than it should be, and I think it's distorted the chart. If you want my honest opinion, I think drawing a Fibonacci series, retracement series, Litecoin, the all-time high of around 450. I think it's kind of silly, but at the same time, secondary peak, that one when I was working on the article on Sunday, and it was still 5 or 350. Still got a long way to go in order to get back to functional bull market stance. I still think that we're in crap points, and rightly so. I mean, all of the competing currency coins to Bitcoin are still in trouble. Technically, still have a long way to go to recover their mode. I think the market at this point is not quite sure whether they're going to be allowed to function as a price, as a medium of exchange, of clearing currency. There's still a lot of political risks around because of that. I think the platform coins are going to do better in the platform token, better in the first stage of recovery. Got it now, and you can see that bearing itself out in a lot of these coins. In a lot of these tokens. Sorry, they're all recovering really well relative to their original position or their I look at issuances like Steam and trading back above $4. I see EOS trading at 19. I see Ethereum back over 50. Now these are Neo's trading at 85 or $90 right now. Yeah, it hit a high of 100, but that got way ahead of itself. So I'm certainly hoping that we're not having any sound problems. We are still trying to figure out what's going on. Got no CPU whatsoever. So if it is, it's purely coming from sucks for doing this kind of thing. So working right at the limit of capacity. It's one of the problems with living rural, but long time followers of my work, you guys know what. All right. So the next thing I want to talk about on top of that is let's talk about Tesla. Now, those of you who've been following me for a while, those of you who subscribed to the newsletter for a while, know that I have been really bearish and almost unduly harsh on Tesla as a company and on Musk for a while now. Don't take that as hostility against electric cars or anything, or the progress of technology or anything else. So I'm not sure what I can do about that. Because it's not the case. I'm all for whatever technology is out there that works. I want to see technology move forward. I want to see our society move forward in ways that we've never been able to consider before. I mean, if you think about where we were 10, 15 years ago in computing, today we're literally, sitting there with a watch and a little Apple EarPod thing, and now you're Dick Tracy. I mean, seriously, we're at Dick Tracy levels of miniaturization and computing power and connectedness to the world. What was sci-fi and cartoon 70 years ago is now reality today in a way that the best of us in speculative fiction and futurism have not been able to accommodate for. It's impressive beyond belief to see what we've achieved in so short a period of time in terms of computing, and that bodes well for the future of transportation and communications and everything else. It's fantastic. So Tesla to me has always been a bad idea, not because Tesla the concept of a Tesla, bad idea, but because the company itself was founded on bad ideas. Tesla's just not a well-run company, and and we finally kind of hit that wall, and that, kind of, for lack of a better term, Minsky moment, where everything is just kind of blowing up on them all at once because they've run out of other people's money to scam out of their pocket. They've run out of grant money. They've run out of subsidies. They've run out of all of this stuff, and they don't have a functional company to just source basic parts to build freaking cars. They've done all this wonderful work in terms of the software to run the car and the power generation, the power manipulation, and all this stuff. And this really great stuff that Tesla has, and really great technology that Tesla has produced. But they have not, at the same time, put the same attention to detail into the nuts and bolts and boring old shit about building frickin' cars, which is a boring business. And it's contrasted completely today with yesterday. That was yesterday. And then the day before was Apple and Apple's earnings. I was having a discussion with my partner about this literally yesterday morning in preparation for Tesla's earnings, and he's a longtime Apple investor. Knows the company probably better. If not, I know he knows the company better than most analysts working on Wall Street. When I need an opinion on Apple, I call him. I don't read reports from J.P. Morgan or Deloitte or any of those other. I don't read those because I don't give a shit. I call my friend. I go, dude, what's up with Apple? And then he goes on a diatribe for an hour about shit I'd never know, and that most people in the marketplace don't know, and most people writing on Seeking Alpha don't know, or anything else, or people who follow the company don't know, don't understand. And he gives me the dope. And we were talking about how the analysts missed Apple's earnings so much because they had completely black-pilled the market, that by doing channel checks and doing bad research and just regurgitating bad research, that they misled the market terribly about sales of the iPhone 10 and how it affects Apple's bottom line. And Tim Cook has told them over and over and over again at every earnings report. They ask the same stupid fucking questions every earnings report about supply chain, about the supply chain disruptions and what they're seeing in the channel and everything else. And he says the same thing every time. I'm going to reiterate to you guys. This is paraphrasing Tim Cook. He says, look, you guys can go out into the marketplace. You can check the channels all you want, and you will not be able to understand one whit what we're actually doing with and without our suppliers. You will not be able to make any assessments of what we're doing. We have the supply chain. Look, we own the supply chain. We are the supply chain for so many of these things. And at the size of a company like Apple, they have the ability to do things that a normal company do. Remember, Apple's CFO is managing a pile of cash bigger than most Fortune 100 companies. A $250 billion pile of cash. That makes that division in Apple a Fortune 100 company. Okay? They do things differently than everybody else when you're that big. Okay? They just do. They have the ability to beat their suppliers up in ways that no one will understand. That no analyst making, 75 grand on Wall Street writing reports for JP Morgan's ever going to understand. Can't do it. And Cook has basically told them multiple times over and over and over again, better off going out the old way outside of Best Buy and with a clipboard and going, how many people bought an iPhone? You'd be better off doing your channel checks that way. Going back and doing the old school, standing outside with a clipboard. And I bring this up because it's important to see the contrast. For years, everybody's been looking for, when is the bubble going to burst in Apple? When is Apple going to finally screw up and we're going to start to see some operational failure, operational fault line, that's tied to a bad product line so that they can go short? When is that going to end? At the same time, they've been pumping the crap out of fucking Tesla to the moon over hype, but no actual operational success. They can go in and they can see Tesla not being able to run a car company. I mean, like it or not, Ford knows how to build cheap cars. They've decided not to do that anymore because, well, building cheap cars is not worth the money you put into them because no one wants them. But hey, they know how to do it. They know how to beat their suppliers up. They know how to manage the supply chain. Every major car company knows how to do this. And building cars, no matter how technologically advanced the car is, no matter what components actually go into the car itself, supply chain management is supply chain management. That's it, period. There's nothing new about it. The fact that Tesla has always failed at that basic fucking level. And it was one thing when they were a boutique company building, 5,000 or 6,000 Model S's or Model X's a year. That's one thing. Well, now they're trying to build 5,000 Model 3s a week. That's completely different. That's a different skill set. That's a different core competency. And this is why I've been bearish on Tesla forever. Not just that. Yes, it was. Tesla was worth more than Ford. At one point, Tesla was worth more than Ford. Kidding? Have you looked at the market caps of Ford and GM? They're nothing. Those companies traded like 4 times earnings. Maybe not 4, but not right now. Not with the. But it went during the height of the cycle. Ford's price never rose while it was throwing off cash like it was going out of style. No one wanted to believe it. Everybody was waiting for Ford to fall over. I mean, I know I had people, I had recommended people to Ford when it was trading at a PDE like 7, throwing off a 5% yield. In a blue chip, an American blue chip, throwing off, in a car company, throwing off a 5% yield. Trading at a PDE of 6 or 7 or 8 or whatever the fuck it was. Are you kidding me? And yet Tesla was going to the moon. It's like they should have never. No, of course. Okay. Yeah. The Green Penguin's arguing with me about the value. I'm talking about market cap. I'm talking about what the market actually valued the company at. Because you understand that we're talking about investing here. There are people out there who still believed in Tesla at $300 a share. Okay. I mean, I don't get it. Right. And honestly, the next thing to say here is that Tesla has been engaging in actual, honest to God, fraud for years. Musk is going to go to jail here. And I said this a year ago, and I got so much pushback from people who love the cars and the technology in the car that they said, best car I've ever owned, and da-da-da-da. And yeah, sure. When they can build one of them a day, you got to put a production line together and build 700 today. Not the same car. Not the same process. Not the same core competency. It's not the same business model. It's not the same business structure. It's not none of those things. And Musk spent 0 time as CEO putting that structure in place in order to cover the orders that he took for the Model 3. And this is a classic example of what happens when you subsidize a market, subsidize something like the electric car, when you divert capital from the productive part of society to the unproductive part of society, and then wonder why it doesn't work. There's no discipline, there's no market discipline put on a guy like Elon Musk, who's got the vision, maybe, but not the skills to execute. I mean, look, Apple was not built by Steve Jobs. And I'm going to come right back to why I was making the comparison earlier. Apple was not built by Steve Jobs. Apple was built by Tim Cook. Because Tim Cook is the greatest supply chain manager in the history of the world. And Musk never had his Tim Cook to build the fucking company. And the net effect is going to be hundreds of billions of dollars thrown into the ether. This company goes into complete bankruptcy. Now, its IP portfolio is fantastic. They'll be able to sell it all off. And they'll recoup some of it. But a class action lawsuit for fraud? For investor fraud. Because Musk was out there knowing, if they've got him dead to rights, knowing that if they've got records of him knowing, having been told there's no way we could ever reach $5,000 production target, 5,000 unit per week production targets before an earnings call. And then he went out there and said, oh, no, we can hit $5,000 in order to raise money. And then went out and raised money with that, on that assertion. He's going to jail. He's going to jail. Or at least he should. And if you've lost Wall Street as much money as Elon Musk is about to, you're going to jail. Just like Hillary Clinton's going to go to jail after the Democrats get wiped out in the midterm elections. If she goes to jail at all, it'll happen after the midterms, after she's cost them everything. Yeah, I mean, manufacturing is boring. It's absolutely boring. It's not interesting. It's not going to Mars, guys. Okay? It's not sexy. Okay? Not sexy. It's the Toyota production system, writ large. Brilliant. Toyota remade manufacturing back in the 80s. What they've done to improve the efficiency and throughput of manufacturing, Toyota deserves more credit for moving humanity forward than any asshole like Elon Musk. I seriously. If you understand the Toyota production system and how it works and why it works and why Toyota nearly bankrupted the rest of the frickin' world, rest of the auto world. Toyota's production efficiencies that they put in effect in the 80s and the 90s were so good, were so powerful, they were so endemic, they so infected the entire automotive supply chain that it improved everybody else's cars because all of their suppliers, they're all the same suppliers. So if Toyota can go into the plating shop that puts the chrome on the freaking bumpers and gets them to do a better job of it for their cars, I got news for you. GM benefits because GM's bumpers are the next ones going through the freaking plating baths. They did unbelievable work to improve the value of the automobile you buy today. What value has Tesla driven the marketplace? What downstream effects have there been of Tesla's innovations? None. Until their IP portfolio is sold off and can be used by other people. Then it's going to get interesting. Then Tesla will be interesting. Now, will that be worth the billions of dollars that we as taxpayers were built for Musk's grand dreams of sending humans to Mars? Because that's what he's really interested in. No, it's not. It's like NASA wasn't worth fucking Tang and Velcro. Spend billions to get thousands, and then trumpet the thousands. Woo! Because we wouldn't have done it otherwise. Yeah, we would have. We'd have figured out Velcro. We would have. All right. Last thing on the docket for this morning, we're at the 29-minute mark, is the dollar. I've been telling you for months that at some point soon the dollar would bottom. Like the Bitcoin market, is it in a bull market yet, or is it still in a bear market? Well, technically, from a medium-term perspective, Bitcoin's still in a bear market. Great. Long-term, bull market. Medium-term, bear market. Medium-term being weekly chart. I don't know. Shane's asking if Tesla's bankruptcy imminent. If you look at the article from Zero Hedge that I've got linked in the notes, look at the profile of when they got to pay back all their freaking debt, when all their debt has to be rolled over. 90% of it is in the next 18 months. They have to go to the marketplace to go get more cash at the rate that they're burning cash. And then they've got to roll over the debt. How are they going to go back to the marketplace and get more debt or get more money? I'm telling you, yes, they're going to go bankrupt. It could happen this year. Oops. It's that bad. We'll see what happens. Trump's not going to bail them out. They're an Obama creation. He's not going to bail them out simply because they're an Obama creation. So you can forget that shit. It's not happening. Okay. We're at a moment where it looks like, the dollar really put in a bottom a couple of months ago. But again, it's like everything else. Until you get the technical signal that the dollar has actually bottomed and negated the probability that it can go lower, you can't say that it's bottomed. And so we're at that point in the dollar now, pushing above 92. So that, get rid of the garbage. Get rid of the unproductive stuff. Tesla has been revealed to be non-economic. Therefore, it needs to. So the dollar has put in that technical signal that has bottomed. We're starting to get a rollover in the euro, and we're starting to get movement in other areas of the market as well. And so this is really important, because once the dollar starts to break out to the upside, which it's doing now, once it confirms, okay. Martin Armstrong brought up this morning something I had missed in looking, which is that the Italians cannot form a government, and Five Star Movement is now looking to is calling for snap elections in June. Of course, the EU doesn't want them to do this. The Italian president's not going to is going to fight this for as much as possible, but it's very obvious that at some point something's going to have to be done, and a second vote in Italy is going to be even worse for the establishment. You're going to see more voters go for Five Star and Lega Nord and the League, and that's going to change everything, because it's at that point they're going to be able to make the argument. Once they're firmly in power, they're going to be able to make the argument that they can leave the euro. It's one thing to lead a coalition government that's weak, like what happened to Syriza in Greece, and of course being completely feckless Greek leftists, but that's a different story. Five Star understands, and the League both understand, that the euro is draining Italy white, draining the color from the country's skin. It's terrible, and it needs to change. Something needs to be done, and so it's a very interesting potential catalyst in June. It wouldn't hurt also if Trump and Kim come to an arrangement in May, this month. So all of these things are pointing towards a stronger dollar. And the growth numbers out of the U.S. are fine, but more it's gonna come down to the fact that things are just bad in Europe. Okay, and when everybody's on the wrong side of the trade, then we are going to get a move in the opposite direction. The euro went way higher than it should have, and the dollar corrected way more than it should have. And well, it should be interesting. Like a report to see what you hear on the ground in Rome. That would be interesting. Kidding? So, yeah, I'm cautiously optimistic that, well, that's kind of ironic way of putting it, because once the dollar rally begins, it's going to snowball quickly out of control, especially if we get any kind of political unrest in Europe. And that's going to change everything. And it may not happen this year. It may take another 4 or 5 months for this to play itself out. We'll see. The euro needs to break down below $1.15.5 for there to be a significant change of trend. But you know, a bottom in the dollar does not a bull market make, right? It just means that we've got a bottom in. It could trade sideways. Everything could trade sideways in a band for a few months before then breaking out into new ranges. So we'll see what happens. But the fundamental thesis is still in place, which is that at the end of the day, Europe is in much worse condition than the United States is, no matter what balance sheet looks like in the short term, because they're trapped and cannot get out of QE. We are getting out of QE. We've got a massive pension crisis. We've got an underfunded liability crisis that we've got to deal with. We've got significant political unrest, but it's nothing compared to what's happening in Europe, because at least our political structure, for as flawed as it is still better than theirs. And at least we have a currency system that makes sense. Okay. So, let's watch this dollar bottom very carefully. Let's see what happens with the dollar relative to gold. Also, gold's been weak for the last few days, pushed down to just above $1,300 after backing away from the post-Brexit high around 1365. Well, the post-Brexit high is 1375, but there's a big resistance zone above 1360 in gold. I've talked about it at length, and that's the signal for a new bull market in gold. We'll see. What we're looking for is a realignment of assets. We're looking for a realignment where we see U.S. stocks, the dollar, and gold all rising at the same time. We're not there yet, but you can start to see the beginnings of the decoupling of classic relationships. And that will mean a fundamental shift in sentiment, that there's a push for quote-unquote hard assets. Now, not the U.S. dollar or U.S. debt are hard assets, but they are hard assets in today's environment relative to the players in the environment who move the most money. Right? U.S. Treasury bonds are tier one capital asset. That makes them hard assets. Okay. Soft assets would be tier 2 and tier 3 capital assets that the banks have to hold on their balance sheets at a significant discount. I think the Basel III rules have finally done away with tier 3 capital assets, but I think there's only 2 classes now. But it's still an important distinction. Okay, and understand that what a rational person's definition of what a hard asset is different than what the legal definition, what the legal milieu and regulatory milieu would determine as a hard asset at that moment in time. Now those definitions will shift over time as the regulatory milieu shifts, but at this point in time, U.S. Treasuries are considered a hard asset, for better or for worse. U.S. stocks are going to be considered a hard asset because of our relative political stability relative to the rest of the world, relative to the fact that we've never defaulted on a bond. We've never canceled our currency. Okay, British have. The Europeans have. Everybody else has. We haven't. That's still a major strength. It's still a major reality of what's going forward. And so, I'm not in favor of these definitions. I'm just telling you what the definitions are. Remember, thing, gold, goats, and guns, right? So, you know what I prefer, but you know what I recommend to you, y'all, as good investments. But at the same time, you have to understand what that shift in alignment is going to mean, and then how you're going to be able to play it from a portfolio perspective. Hopefully, we're all positioned properly for it. That's pretty much what I've got for this morning. If you guys have any other questions or any other answers, throw them in the chat here in the next 35 to 40 seconds as I go through the ritual of kind of signing off. And we'll keep this going a little while longer. If you like what you heard today, please subscribe to the channel. That would be great. Like the video as well, also necessary. And if you want to be actively involved live with the stream so that you can ask questions or make comments, you have to turn your notifications on directly by going into your settings on YouTube and clicking the bell and turning that to always on, so that you'll get an email from me saying, hey, or from YouTube saying, hey, Tom's gone live and he's talking. So Will we, so Green Penguin, as I'm doing now, Green Penguin is asking, will we be able to avoid canceling our debts relative to the dollar? We'll probably muddle through. There's going to be some things that go, we're going to internalize and bail out certain, or allow to go bankrupt, certain massive liabilities. Things like state pension system, which will have to be either completely reformed, and certainly Social Security, which will have to be completely reformed, and their benefits cut. I think that's a no-brainer. It's part of the reason why the Fed is hell-bent on raising interest rates at this moment in time. They're trying to get yield back into the fixed income market, into the guaranteed benefits market, which is it's a significant problem. It's a $2 or $3 trillion. There's something like $2 or $3 or $4 trillion in arrears. It's a lot of money. Okay, and these are not liabilities that are net or hedged off or whatever. These are real liabilities. You've got cash flow issues where these people have to be paid cash, and that's that. And there's no way of getting around it. You can't slough it off and slice it and package it into a CDO, and you can't do that shit. These are real liabilities that have to be paid with real cash flows. Cash flows aren't there, well, then the system goes bankrupt. As far as national debt's concerned, it'll never be paid off. It'll never be paid back. No national debts will ever be paid. Whether or not, and if we have to cancel debt / renege on our debt, we'll be the last ones to do it. Okay, we'll be the last ones. Everybody else will have to do it first. And then once it'll happen there. I don't know that that's in the cards. It's very possible. Okay. If there are no other questions, then I'm going to sign off. You can follow my work over on Patreon, over at Patreon.com/goldgoatsandguns. Would really appreciate it. You can subscribe at the tip jar level, the $4 level for the private blog and private community, and $12 a month for the Gold, Goats, and Guns investment newsletter, the next issue of which should be coming out on Tuesday. You all have a great afternoon. You take care. We'll talk soon. Keep your stick on the ice.